Hello everybody and welcome back to the channel. Today I want to talk about a market in the Melbourne region which has got a fair bit of interest recently. There are some who talk good things about this market because of its affordability and economic conditions, and there are some who advise you to stay away from this market because of the high supply in that area. So I wanted to deep dive into this market, look at the actual numbers and whether this market would make sense investing in the long and short term. So I wanted to share some numbers with you so that you can decide for yourself whether this would be a worthwhile investment or not. I'm actually going to talk about the region of Melton, which is in the northwest of Melbourne. Okay, so let's dive into this. For those of you who don't know me, my name is Jathu. I'm a buyer's agent for property investors and I buy properties all around the country using a data-driven approach. So if you want to work with me, go to my website propertyframeworkbuyersagency.com.au and book a session with me there. Now, let's look into the Melton region. So I'm going to talk a few different things in this video. First, I'm going to look at the market pressure in the Melton region. Is it really cool or are there any signs of life coming in this market? Then I'm going to compare it with another region which has high supply. So I'm going to talk about the Wyndham region and compare this with Melton. After that, I'm going to talk about the economic conditions in Melton and the infrastructure projects, whether it would make sense to invest there in the long term. And finally, I'm going to talk about some things you need to be very careful about if you decide to invest in Melton. So let's get into this one by one. Let's talk about the market pressure first. Inventory in the Melton region is sitting at 5.5 months. Or for a balanced market, we would expect 3 to 4 months, and anything under 3 months is typically a hot market. So at 5.5 months, Melton is a relatively cool market. The house price change, if you look at the chart here, this shows that the prices have actually dropped over the last 2 years, 610,000 till about 600,000 now. Now let's look at the listings trend in the Melton Bacchus Marsh region. This is on an SA3 level. The listings have seen a drastic reduction over the past 12 months, from 1,400 to about 800 now. This is a 42% reduction in the listings. So something is definitely happening there. Listings don't just drop by 42% without any activity happening in that region. Now let's look at the sales turnover here. So it's improved from 2.1 to about 2.3. So a slight improvement in the sales turnover, which is showing that demand in the area is increasing. In terms of the days on market trend, now this is looking at the Melton SA3 region as a whole, Melton Bacchus Marsh region as a whole, and we're seeing that the days on market is steady around 46 to 43 days. So not much change in that days on market over the past 12 months. Now let's just combine all of this together. Inventory is high, so it's a cool market. Listings are dropping, supply is dropping, but the demand is constant. So this means that the market is tightening. There's pressure building up in this market slowly, and I'm expecting this market to pick up in the next 1 to 2 years. So there will be price growth happening in the future in this region. Let's look at the long-term trends in the Melton region. In terms of the long-term trends, we are seeing 6.5 to 7% growth per annum in the long term. So this is the 30-year graph for Melton, and you can see that most suburbs have grown by at least 6.5 to 7%. So they have not underperformed over the last 30 years. Now, let's move to another region which has high supply. So I want to look at the Wyndham region. So inventory in the Wyndham region is at 7.8 months. So a lot of supply here. The listing trends, as you can see here, it's moved from 1,821 to about 2,232. So listings have increased by 22%. The median price in the Wyndham region is steady at 655,000. It hasn't really changed. The days on market is also steady. The sales turnover has slightly increased from 3.2 to 3.5. So you can see here a big difference in the Wyndham region as compared to the Melton region. The Wyndham region is much cooler. The listings increasing. The demand is constant. This means that there's no pressure in this market at all. And this means that even in the next 1 year or so, I don't expect things to change. So I just wanted to compare those markets to show you which one would most likely see price grow. Now, let's look at the dwelling approvals trend. Now, this is the big question in the Melton region. The people are worried about the high supply that's going to come into that region. Okay, now let's look at the change in population here. 173,000 in the year 2021, moving to 455,000 by the year 2046. So that means the population is more than doubling in this region. In terms of the households, we see 54,513 households, moving to 152,841,000 households. So 3 times that number by 2046. So why I wanted to highlight this was, yes, there is an increase in the dwellings from 56,000 to 160,000, but there's also a lot of demand in the region from population moving into that area. So while there's a lot of supply, there is also a lot of population increase into that region, which would balance that supply. And that supply is not going to all come at the same time. That'll be released in stages. And with demand, there will be also infrastructure spending. New facilities, new amenities will come up in that area, which will make it attractive to first home buyers and owner occupiers as time goes on. As the inner suburbs of Melbourne become less affordable, people will be attracted to these affordable suburbs which have the infrastructure and the amenities in place. Now let's look at some major infrastructure projects lined up for the Melton region. We have a 1 billion hospital, and then we have a Melbourne Business Park, which is worth 2 billion. The Westgate Tunnel project, which is a 10 billion project, is set to improve connectivity to the Melbourne region, to the Melbourne CBD region. And we also have new train stations that have been recently built, and there are also plans to build multiple schools in the area. So all these factors will make it attractive for families and owner occupiers to live in the future. But I'm not going to blindly invest in the Melton region. There are some things you need to be very careful of. So over here, I have shown you suburbs which have a vacancy rate of more than 3% as of now, right? I'm going to avoid all these suburbs. Why? High vacancy rate means that I'm going to find it harder to find tenants for the property. So all the suburbs here, you can see that the building approvals is also fairly high here. I'm going to avoid all these suburbs. The areas that I'm going to consider are those which have tighter vacancy rates and low building approval trends. I've put in some suburbs here. Areas like Melton, Melton West are still quite affordable. You can buy properties around that 500,000. These areas with tighter vacancy rates, the established suburbs with lower building approvals, these are the suburbs that I'm going to consider if I'm buying in the Melton region. So that's the summary for the Melton region. Yes, there are some risks with supply that come with it, but it does have promising things in the future. I think the market is tightening up. As long as you're careful and select the suburbs correctly, I think this suburb will do well in the long term and your investment will do well in the long term. So I hope you found this useful, and I'll see you in the next video with more content.